What's going on, y'all? It is the day after Christmas, so happy holiday season to everybody. I hope you're enjoying time with the family and definitely not trading for the most part, unless you're just following along, watching me acquire more funding as we wait for the new year. But right off the rip, let's go ahead and get started with some lights. Bam, son. And it's a fucking party. All right, so let's get right into these charts and see what we can make happen. Let's get directly back into it. Same thing we do every day. Head into US 30 because we're not trading Forex pairs currently. And so let's kind of see what type of outlook I got now that Christmas is over, bro. So coming back in a 4-hour time frame, look where we're revisiting, okay? So we keep talking about this very prevalent area that was resistance, turned support, now turned resistance, and coming back up to potentially be resistance again, okay, to potentially push lower. So going to lower time frames, as long as we're sitting below this 43,200 level, we're going to continue to look for sales for the most part, okay? However, if we were to break above this point here, we can expect that, price is sitting above this very valuable resistance, and probably we're going to continue higher, potentially to this area sitting right here, okay? How do we know it's a prevalent area? Because if you look at it in the past, it was support, turned, I guess resistance for a second, support, resistance, very prevalent areas. This is a higher time frame, okay? So something to look at once we get up to that point. And then in between these zones, there's obviously free game. I mean, we're more bearish above this zone here, or bullish above the zone here coming up to this point, but still open to sells. As you see, we're still in bearish momentum here. Now, going down to 15-minute time frame, do we have any new zones to kind of mark out as far as a prevalent area? I mean, we do. We have a new found resistance sitting up here, which if you drag it to the left, I mean, it was definitely a prevalent area. Let me delete these smaller zones until we get to lower time frames. It was definitely a area where price was holding off of in the past. I'd kind of probably move it down here more so. Kind of a big zone. Okay, so once we get down to this point, maybe potentially something to look at as far as pulling out of ourselves if we get into sell somewhere up here, because it's probably an area that can reject. And so going down to 5-minute time frame, still dealing with the same bias of bearish, still trying to look for sells. It's kind of try to find a bearish setup. So look what's happening here currently right away. As we always talk about previous session highs and previous session lows. Okay, sitting up here. Let me make these the same color I usually have them. Boom and boom. So look what's currently happening right now. Currently what's happening is we've created London lows, which really for me is down here. And now we're sitting within the range. And so if we were to break below these London lows here, I mean, they're technically right here. I get that. And we kind of already broke below and came back within the range. But if we were to break back below these lows sitting down here, we have a nice gap to fill before coming down into that support we were speaking of, about 80 points. I'd be glad to take the sell-off. And then as far as buys right now, yeah, we got a little minor trend line that's forming here. And it looks like we've broken out of it. And so a push back above this level here would potentially be a good area to buy. But we don't have a formed resistance yet. For the people who don't know, a valid pullback to me is 2 or more candles going the opposite end of trend. So if this candle was to close bearish and then the next candle were to close bearish, great. Now we have that newfound resistance there. I'd probably take it as soon as we broke above this 5-minute structure. This is 5-minute structure pushing down, minor retracement, push down, minor retracement, push down. And then so if we were to break back above this resistance sitting right here, this is also a lower high. This is also 5-minute time frame flipping bullish. And then I would be glad to take the buy up from that point once we break above those highs. So kind of have everything situated. We got buys here. And then we got what we really want, which is the sell-off sitting down here. So one thing I want to say, first of all, we're about to be getting into this trade here soon, is one thing that I think I don't want to admit as much as is really true, So let's break it down. Over the last 2 weeks, I have been trading without going live in front of others, okay? For the first time I've done it for 2 full weeks since I started doing this about 3 years ago. First time. And what I understand that, and what I've understood to kind of, break this back layer by layer, number one is what I do is I educate either struggling traders or new traders from being, not very well versed within the markets to being a consistent, profitable trader. And my biggest question to myself, and the biggest question that people ask me as well, is how long is this going to take to get from this point to this point? And obviously, it takes time. Obviously, nothing is fucking easy, but every person is completely different. And so, as a standard, how can I make something that more often than not for the majority of people is going to expedite their learning curve as quick as possible? And what I've found out over the past couple of years is it's a mechanical view of the markets, okay? A very rule-based system. If XYZ lines up, take the trade. If XYZ doesn't line up, do not take the trade. A very mechanical way of trading, because more often than not, if you're using the system, you're going to be correct. And more often than not, if you don't use a system, you are not going to be correct. And implying that and burning that into beginners or struggling traders' heads. And so they have something to fall back on every time their confidence is low. They lose a couple trades in a row. Things aren't going so well psychology-wise. They're trying to get rich too quick. Well, they always have something to fall back on, which is a mechanical view of the markets. If XYZ lines up, take it. If it doesn't, don't. And it's a very simple reason for that, of why I make people only trade with trend, because trend is exactly that. It's a trend. It is stating that more often than not, prices continue on in that direction. And so try to catch that wave to continue on within that direction. More often than not, you're going to be correct. You get what I'm saying? And so understanding this, starting off, that is by far the most quickest way to expedite your learning curve, is to put a very rule-based system in place. But once you understand the mechanics of the markets way down the road, a couple of years down the road, you're already a consistent trader. Things are just being done verbatim. You're not thinking about it. They're just fucking happening. That is when you can start to, and of course, this whole time you're acquiring data. You're journaling every last one of your trades. At the end of the week, you're looking at them and seeing what you could have progressively done better, and potentially gaining these little insights that could, that could up your win percentage. But you're not acting upon them and putting them in your system. You're just acquiring data until it gets to a point where you can apply it to your system and up your win percentage. This shit takes fucking time, bro. A lot of time. And while you're acquiring these insights, the way you're able to stay profitable and consistent is by sticking to my very mechanical style of teaching, and then over the course of time you can apply it. But nonetheless, what I've realized, this is again my 9th year within the markets, my 5th year of being profitable, is trading is a little bit more conceptual than I lead it off to be, as far as myself and other students as well. I do understand the mechanics of the markets a lot deeper than my other students, because I've had more experience and time within the markets to understand the cycles of it and such. Are they becoming better? Absolutely. Will they get to the point where they can start doing the things I do? Absolutely. But starting off as a beginner trader, to kind of sum this all up, the truth about trading and expediting that learning curve is, I genuinely believe, starting off, you just need a very mechanical view of the markets. A strategy that if XYZ lines up, go ahead and take the trade. And if it doesn't, do not take the trade, and unforgivably follow that, because the person who taught you it has the data back behind it. That is your foundation. Just like in gym, your first year of trading, there's not little minor things that you're doing to get that bench press better. You're simply just going through the movements and trying to consistently be in the fucking gym every day. That is your only job for year one. Same thing with trading. And obviously over the course of time, you'll start to figure out things like, oh, when I move my hands like this, I'm starting to get a deeper burn. When I'm pushing upwards, when I'm pushing back towards my head instead of pushing forward, I'm starting to feel a deeper burn. And obviously over the course of time and experience, you'll just start to get better. So just kind of my 2 cents as my view of the markets from beginner to the point that I'm currently at. And as far as this trade goes, we're about to get into it. All right, so it looks like we're about to be getting into these buys here. Order filled. And order filled. There we go, baby. We in here. Okay. Not looking so good. I'm pulling out here at 500. Order filled. Order filled. That is it, but still have this bias for buys, for sure. This will be the last trade of the day. Boom, and we are in. Not the 5-minute closure we want, obviously. We closed below that resistance, but we'll see, man. Now, one thing we do have to expect, exactly what's happening right now, is some type of bottom wick before pushing higher, Although I don't need that to get into a trade, we just have to understand going in the path, the past kind of predicts the future. More often than not, every one of these candles obviously has a top and a bottom wick. Every last one of them, more often than not. So when you see a candle open up very bullish or bearish, just understand it's probably going to come back up or down to create that wick before continuing on anywhere, because more often than not, it has a wick. Okay, looking like we're gonna have to pull out of this trade here too. Brutal. As soon as it hits that 500, rough day for us here, yo. We're gonna have to stop trading from this point. There's just no volume pushing price in any way. As soon as we start to break through any of these exteriors, it just seems like we come right back within the range. So if this doesn't play out, bro, we're gonna call it a day from that point for sure. 3 minutes before this 5-minute candle closes, so you know we want a solid push at this point. We've already came out and violated that stop loss by a bit. Chose to hell. I mean, we still haven't even broken below previous candle lows, but you know, I'm not going to hold on to this one too much longer. It's not showing me anything at all that makes me want to hold beyond the stop loss at this point. Finger on the trigger at this point.
Order filled.
Order filled, yeah, that's it. I'm gonna call it a day. Gym time, get off the charts time, and we'll get it back tomorrow.